Good morning students, welcome back to today's class. Today we are going to see that Accountancy chapter number 5, Accounting Ratio, video number 12. And in this class we are going to discuss about that Profitability Ratio. In Profitability Ratio, this means we are analyzing especially that profit and loss account. So we know that the profit of the firm is very important. So in order to analyze or in order to understand about that how much profit is earned or how much profit can be earned or maximum how to improve that or for all this purpose we want to see that we want to analyze about that profit of that the firm. To analyze about profit of the firm, we take that profitability ratio. In this you can see that many of the profitability ratios are there. Gross profit ratio, operating ratio, operating profit ratio, net profit ratio, return on investment or capital employed ratio, return on net worth, earning per share ratio, book value per share ratio, dividend payout ratio, price earning ratio. That so many ratios are there, but we will discuss mostly the first 5 and the second we will cover in as fast. Okay, means that is not that much important, even though just we can cover that. So among this, first we can see that the gross profit ratio. Gross profit ratio is showing that the
percentage of revenue.
Revenue from operation and gross profit. Revenue from net revenue from operation with the gross profit. Clear, no? It is showing that the relation between gross profit and revenue from operation. And these profitability ratios are normally showing in percentage. So that ratios you can see that multiply with 100. That means we are showing it is in the percentage. So here is the equation to find out that the gross profit ratio, that is gross profit upon net revenue from operation into gross
Profit ratio.
Ratio is
Gross
equal to
profit.
gross
Profit
profit
upon net
Upon
revenue of operation
revenue
into 100.
This is the equation we use to find out that gross profit ratio. So here you need to understand that what is gross profit. You already know that what is gross profit. Gross profit is a in simple way you can say that in the profit and loss account we can see that in the trading and profit and loss account we can see that the trading account as a result what amount is coming, that we call that the gross. So here we compare that gross profit with this. Means from main revenue minus direct expenses. And here while we are considering that opening stock and closing stock also purchase. Clear now? That means closing stock will be added with the revenue and purchase and opening stock will be come as the expense side from the direct expenses, and all other direct expenses also first we will add, and from the revenue we reduce this. So we get the gross profit and revenue from operation, net revenue from operation we already had seen. So here is a sample question. Let's solve that. Through this we will get to understand more about that. So you can see that illustration number 90. Following information is available for the year 2014-15, calculate gross profit ratio. First is given that revenue from operation.
Cash.
So that is given as a cash and credit. So you understand that revenue from operation, it can be either cash or credit. So here both is given, cash and credit. Next is that purchase. Purchase also you know that
Cash and credit.
cash and credit purchases are there. That is given. Then carriage inwards. Carriage inwards means what is that? It is a direct expense. Okay, you understand that carriage inwards is a direct expense and carriage outward is a indirect expense. Next, salaries. Salaries means expense. What type of expense? That is indirect expense. Okay, you always keep in your mind. Decrease in inventory. Next is that return outwards. Return outward means what? Sales return or purchase return. This is purchase return. You understand? No? Return outwards means purchase return. That means we purchase it and from that we are return. If some damage we find, we return that. And return inwards means what we sold, that is because of damage that our customer returned to us. Then we called it is return inwards. Got clear now?
Yes.
Next is that wages. Wage means
Indirect.
not indirect, it is direct expense. Okay, wage is direct expense and salary is direct expense. So first we need to find out that revenue from operation. So revenue from operation here directly it is not given, but indirectly it is given that cash and credit. So we are finding out that cash and revenue togetherly, revenue from operation we get that cash revenue plus credit revenue. Operation is that how much are that amount? Yeah, 25,000 plus
75,000.
75,000. So revenue from operation we got. Next is that we need to find out that net purchase. So total purchase we wanted to find. For that cash purchase plus credit purchase minus return outward. That means purchase return we need to reduce. So then what we get them? Purchase. Purchase is at
15,000.
15%. 15,000 plus
60,000.
60,000 minus
2,000
2,000.
is equal to 73,000.
70,000.
73,000.
73,000. So here we got purchase also. Next what we need to find out the
Revenue from operation.
cost of revenue from operation. Cost of revenue from operation, how we get?
Opening inventory minus closing inventory plus.
Why do we find out that cost of operation? To find out that gross profit. Clear now? What are the cost of revenue from operation? Cost of operation. How much is that?
73,000.
What are items come here?
Purchase.
Purchase amount we already got that 73,000 plus
10,000.
what is that amount?
Decrease in inventory.
Decrease in inventory. Inventory is reduced. That is
10,000.
10,000. Then
Plus
what?
direct
Plus
expenses.
direct expenses. What are the direct
2,000
expenses?
plus 5,000.
5,000 is that carriage inward, no?
Yes.
Okay.
Also 5,000 wages are there.
Wages. Until 2,000 is that return. No. This is wage 5,000 and carriage inward is 2,000. Okay, that return outward not. That we already consider here. Here we consider. And this is direct expense. That is, what are that items? Wage and carriage inwards. Clear now? So total is at 7,000. 90,000. So now we get that gross profit. You get that the gross profit is at revenue from operation minus cost of revenue from operation. That means here we calculate that trading account. In trading account, what we are doing? The same thing. Means, as I said in the beginning, from total revenue, we are finding out that gross profit. For that, we are reducing that. All the direct expenses. That difference here decrease in that 10,000 is that difference of in inventory here closing stock and opening stock. That difference is that this amount. Okay. So we give that name gross profit is at revenue from operation is at 1 lakh. You already calculated here, okay? Minus cost of revenue from operation is at 90,000. Is equal to 10,000. So we got that 10,000 as at gross profit. And now we are applying this in the formula. Gross profit ratio is equal to gross profit upon net revenue from operation. Net revenue from operation, how much is it? 1 lakh. Into 100. 10%. So 10%. The gross profit ratio is at 10%. Clear now? So you need to. In many times we will not get that, as I said that this item we may not get that directly. That is a main problem here. So you need to solve that different question and to find out the gross profit. Not only this way, many methods are there. So by practice only we will come to know that. You understand now? If we are solving only one question, you will not understand. You see that just we need to get that these two amount only. For that only we to find out that purchase, revenue from operation, all other parts. Yeah, that means directly question may not be given. You cannot expect that items directly. Clear now?